Welcome everyone. Here is our agenda for today. We will look at the three key things that are causing defense stocks to soar. We will check if India's key defense stocks are overvalued compared to international players and India's benchmark index. We will dig into exactly which stock does what for our defense sector and how they will be impacted by policies. We will specifically dive into BEL to see if the portfolio stock is really as good as many analysts claim it to be. And finally, we will speak about the 6 risks that can stop this bull run in defense stocks. I will also be sharing the defense stocks that I would buy throughout this video as and when they come up. With that said, let's get started. There are 3 drivers for growth in defense stocks in India. One of the most important of those has been government policy. The Make in India initiative has been pivotal, as we all already know. But one of the most important recent changes that has been swept under the rug has been the liberalization of FDI limits from 49% to 74% in defense manufacturing. This happened in 2020, and since then, Indian defense stocks have been tearing it apart on the stock exchange. But why does that make more of a difference than Make in India? This one policy has allowed India's domestic defense stocks to replace outdated technology with cutting-edge systems by collaborating with international players. Basically, this has opened doors for foreign investment and collaboration, which allows for innovation and growth. Make in India, without these foreign players, would have stayed decades behind in the arms race. This push is likely the single biggest reason for the bull run in most of our defense stocks and what makes the likes of Data Patterns, Zen Technologies and Bharat's Defense such strong buys. Of these, I would sit with Data Patterns because of its exposure to the Brahmos missiles and its expertise in radar systems. Specifically, Data Patterns builds the missile checkout systems for Brahmos. This system is essential to the functioning of Brahmos and was earlier imported from Russia, but is now built in India by Data Patterns. The second reason for the push in defense stocks is the massive defense budget of India, standing at about 7 lakh crore rupees. The Indian government is continuously reducing its import bill and looking to increase its exports, so we can expect a constant flow of orders for Indian defense stocks like BEL, HAL, Solar Industries and Mazagaon Dock. And finally, we have the modernization of our armed forces, with the induction of new technologies like UAVs, cyber warfare and missile systems, all through domestic manufacturing capabilities. We all remember the Akash 3 system and how it performed during Op Sindoor. That was just one of many recent innovations like underwater drones, capable of underwater reconnaissance, mine detection and intelligence gathering. Here, a company named Dokania seems interesting, though there isn't enough information yet for me to buy into it. I will be keeping an eye on this stock though. Another major area of innovation is within the Navy with the Scorpion-class submarines, which is built by Mazagaon Dock shipbuilders. Perhaps an excellent opportunity here, but more on Mazagaon Dock in a bit. Vikrant Aircraft Carrier, which is India's first indigenous aircraft carrier equipped with advanced radar, combat systems and stealth features, is also a notch on the belt of our domestic defense industry. All of this give a long runway for Indian defense stocks, but we know that the stock market prices in everything instantaneously. So the big question then becomes, is all the growth already priced in, or are there still opportunities? To assess that, we will look at valuation metrics like price to earnings and price to book and compare them to international defense companies and our Nifty 50. This is a summary of India's defense sector versus the global defense sector. India's defense stocks trade in the range of 10 to 20 PE with some outliers in the 20 to 30 range. That is very similar to US's Lockheed Martin at 17, France's Dassault at 13 and Sweden's Saab at 18. So from a relative standpoint, Indian defense sector is not overvalued yet. In fact, given that we're an emerging player, we should command a premium over the established players. For example, BEL's current PE is around 25, which might seem high compared to broader markets, but is reasonable for a sector with long-term growth potential and high R&D investments. Its price to book of around 4 indicates a premium valuation, but not an extreme valuation. HAL with a PE of roughly 30 has strong order inflows and technological advancements backing that valuation. Long-term investors see HAL as a technology-driven company with growth prospects. The biggest issue for HAL though is its inability to deliver the orders on time. It will either build that capacity and gain another re-rating or fail to do so and get derated. The production capacity is the key metric to watch for HAL. L&T at a PE near 25 to 30 reflects its diversified business with a focus on defense and infrastructure. It is trading at a premium due to consistent order wins and the fact that it is a stalwart across multiple segments beyond defense. Now, we've seen that compared to global defense firms, Indian stocks are generally trading at a discount or at par. But compared to broader indices like the Nifty 50, defense stocks are trading at a premium, sometimes 1.5 to 2 times higher PE ratios. This reflects sector-specific growth prospects and the government backing for these companies. So specifically for India, the growth is priced in overall, but maybe there are still multi-bagger opportunities in specific stocks. To find those opportunities, let us now take a quick look at exactly who contributes what to our defense sector. Starting with BEL, a PSU with strong government backing, specializing in radars, electronic warfare and communication systems. It is the crown jewel of the Indian defense sector, and as such, we will dig deeper into it. Its biggest advantage is its 76,000 crore order book, but that number tells us very little. Let us see how this order book breaks down based on margin, so we can come up with the amount of profits that BEL can create from this order book. So out of the 76,000 crores, military equipment and systems account for about 70 to 75%, meaning about 50,000 crores. This includes radars, missile systems, communication equipment, electronic warfare systems, and naval radars. The segment has had a margin of about 20% on average, meaning we're looking at a profit of about 10,000 crores from this alone. Civil and defense orders account for about 10 to 15%, and it works at a margin of about 10%, giving us a profit of 1,000 crores. Export orders are 5 to 10% of the order book, which again gives us a high margin of 20%, so another 600 crores in the bag. R&D and system development contracts account for another 5% of the order book, which would give us another 300 crores in profit. So in total, BEL's current order book would create about 12,000 crores in net profit over the next 3 to 5 years. That is about in line with the profits it is making right now. But that is already priced in. Now for the BEL stock to rise further from here, it will either need higher revenue or higher margin. There are only two ways to make profits, revenue and margin. Now for a PSU stock, beating a margin of 20% is nearly impossible. So unless BEL starts bagging much bigger orders, its best case scenario seems baked in. I will not buy at these levels, but on a 20% dip as a long-term investment, definitely. About HAL, it is a leader in aircraft manufacturing, helos and aerospace R&D, and as we discussed though, its production capacity is the major issue. I would not be buying at these levels. L&T is a private sector giant which is involved in infrastructure and naval ships and electronic warfare. Its defense segment offers high margin project wins, which all but guarantee that L&T stock is perhaps the biggest winner from India's Make in India push. Mazagon Dock Shipbuilders is key for submarine and naval vessel production. Specifically for this stock, the P-75I Submarines project could be a game changer. It is a risky bet with delays constantly pushing execution back, but as a high beta play, Mazagon Dock is a very interesting buy. Finally, there's Adani Defense and Aerospace, which is a fast-growing private sector player that focuses on integrated defense solutions and defense manufacturing. However, there is no direct way to invest in it. Same applies for Godrej Group's exposure to Brahmos missiles. It would be an excellent investment if we could find a way to invest. But even in the companies that we can invest in, there are some big what-ifs. The 6 biggest threats to the defense sector stocks in India include first, budget constraints and fiscal policy risks. India's defense budget is increasing, but competing fiscal priorities or economic downturns could lead to reduced allocations. That would impact growth prospects for all defense firms. And even if we avoid all that, India's bureaucratic hurdles are infamous worldwide. Slow decision-making and delays in defense procurement can hamper revenue inflows for defense companies, especially those heavily dependent on government contracts. Increasing competition from international players, especially from countries like Israel, Russia, the US, and China, could threaten Indian companies' market share and export ambitions. Corruption and transparency issues will always exist in India. Of course, corruption scandals have to be spoken of. A lack of transparency in procurement processes can lead to project cancellations, delays, or reputational damage. Living in India, we know that these companies are not free from corruption. We are not hearing about it yet, but one scandal and it can all come crashing down. Unexpected geopolitical shifts, border skirmishes, or international sanctions can also disrupt supply chains, exports, or procurement processes, which could hurt delivery timelines, though this is a rather small concern. To summarize it all, while the Indian defense sector offers significant growth opportunities driven by government initiatives and technological advancement, these threats highlight the importance of careful sectoral analysis before investment. Diversification, staying informed about policy changes, and understanding geopolitical developments are key for investors. While India is making giant leaps in its defense industry, investors would be smart to not get ahead of the growth.